Wednesday, 4/3/2019. I've got Coach Noah, Coach Matt, myself, Coach Tim, and Coach Cody. We've got a four-bagger here today. Maybe we should have played golf, Matt. We've got the foursome ready and ready to go.
The weather is not participating with us on that one today.
Little rainy here. Maybe where you're heading, sunny Southern California, it might actually be a better place to play golf this week. How you doing today, brother?
Yeah, I'm doing really good. Really good. Excited to be here with the crew.
Noah, it's good to have you. Always joining on a Wednesday guest, appearance and whatnot. I know you did the Traders Lounge this morning. You were doing some prep. We're here because you're going to be hosting the Tackle 25 Mastermind group tonight, and we'll get right down to business on that. But how are you, sir?
Absolutely fantastic. Thrilled to be here. Don't have much of a voice, but I'm thrilled to be here.
Well, we all you need is an eye in trading. You give us the eye, give us that muffled voice, and we're going to be good with that. S&P 500 is breaking out, showing strength. I said this yesterday. I'm going to get Noah's take first. It feels destined to want to hit an all-time high, Noah. Could you argue against that?
No, it's destiny.
Yeah, I agree. Matt, upward movement here, 0.7%. Not a huge movement on the market, but people need to remember upward moving markets don't have those 2, 3, 4% up days very often. It's the down days in the market when you're crashing, when they have the big percentage days. Does this rally impress you at all? I mean, we've got 4 out of 5 green candles. We had the little doji yesterday. Continuation here off of what could have been a pullback. What's your read?
No, it's like I said yesterday. When you saw the doji candle yesterday on no news, it was just the market taking a break. And yeah, I'm impressed with the retracement confirmation. I mean, it's exactly what should have transpired when you're talking about technical analysis, when you're testing support with confirmation, and the market comes into that first target at resistance. And I believe that first target at resistance was around 28.63, 28.65. Once you broke that level on Monday, and it was a breakout on Monday, Tim, it was just a doji, testing that little support level. And yeah, now you're on the way to 2,900 like we talked about.
Yeah, it's on the way up. There's no doubt about it. Here where you have that old historical resistance, let me get both your take because both master technicians here. Would you use pay analysis or the old resistance points to identify where this targeting should be? Let's say you're long the SPY as a trade, and you're looking for a location to take profits. Let's start with you, Matt. You got old resistance up there in that 29.50-ish range. Noah, give me an exact read on that. In September.
In September, back here, the 29.48 or so.
29.48, but then your pay expectation might not be exactly there, Matt. How do you come to a targeting on this?
To me, pay is a really good targeting technique when you're within a trend, and you do have a pretty consistent pay when you're talking about the S&P 500 right now. When you're looking at the pivot that happened in February to the resistance pivot that happened in March, you went up about 135 points. And the one that happened in March to early April went from about 27.40 up to about 28.60, about 120 points. So you're really looking at a pay range in that 120 to 135 range. And when you're talking about support right here at 2,800, you're really talking about a pay range in that 29.20 to 29.35 range. And so it really kind of just it's that Goldilocks type target we're talking about, where your pay range is in that 29. Hold on, I got the
Nope, that was me.
Row your boat gently downstream. I like it.
Okay, I had a mute. I had a mute for a second. I was talking in my own ear. But in terms of this, what I was saying is you really kind of have that Goldilocks target scenario happening right now, where your pay range is between 29.20 and 29.35 from a targeting perspective. You have an old pivot point at 2,900 when we were reaching those all-time highs. That's also a significant whole number, and then the tick at the 29.47. So anywhere between 2,900 and really kind of 29.47 is in that zone where the S&P 500 really should go in this current movement before you see some degree of consolidation. Currently at 28.85, you might start to see that slow down here today from a technical perspective. But no, it's bullish, no doubt.
If we're going to look at one stock first in the entire market, it has to be AMD. AMD is up 10%. In the chat here, halftime crew.
Option report pick, everybody. Sometimes it just works out. Good news. Sometimes
not only an option report pick, Matt, but a dirty, sexy money stock as well. And I don't know what's dirtier or sexier than a 9% move to the upside on a breakout. What's going on with AMD here today, Matt?
Upgrade.
Oh, I'm going to go with the justice effect. It's a new thing now. If you haven't caught on to that, first Bitcoin, now AMD.
It's definitely a justice effect.
Yeah, we'll take it, even though there's absolutely zero evidence of correlation there. But
We have two data points that correlate. We're getting there.
okay, I'll take it. But again, there is no correlation there. But AMD got upgraded here today, and you really had a double whammy with the chip makers today, Tim. You had positive news, and stop me before you've heard this before, guys. Okay, stop me before you've heard this before. US and China are talking.
No way.
I'm serious.
We're moving.
Breaking news.
Wait, are they close to a deal?
Breaking news on the tackle trading halftime report. China and the US are talking. It's amazing. And they're 90% there, right? 90% there. 10% get to the finish line. That's going to be a tough 10%, but you do have some positive trade talks, and we know that the chip makers, Intel, Nvidia, AMD, these chip manufacturers, we know they have positive correlation with positive news coming out of China. That's number one. Number two, you get an upgrade on AMD. That's number two. This is AMD is a stock that is a flyer right now. It is a momentum train. And if you weren't in it on the confirmation on Monday or the continuation on Tuesday, I do believe you've already missed that trade. But those of you who were in it, watching those reports, it's got to feel sexy. Got to feel sexy today.
It looks good. And by the way, when the rising tide, it will lift all boats. You see Micron as well and AMAT. Noah, give me a quick flash fire through Micron and AMAT.
All right.
I feel like you've missed AMD. Micron's breaking out right now.
Yeah, you might not have missed Micron.
Yeah.
I mean, that's closing above its previous pivot. That's getting above the 200-day moving average. That's a good one. If you look at Applied Materials, you look at Intel, you look at Nvidia. I like the trade on Nvidia. It's kind of setting up right here as well with NVDA, and that's breaking out here on Nvidia, breaking out on Applied Materials. I mean, pick your poison. Not bad choice of words. Pick whichever one you want when it comes to the chip manufacturer right now, because they're all flying.
I agree. As for the S&P 500, there's not a lot of stocks down, but out of the stocks that we're selling, I saw a little bit of weakness. XCC, RTN, Raytheon, some of those types, industrial type companies. Altria is down today, about 2.9%. Northrop Grumman, which is a stock that I've been bearish on recently on the bear option report. Give me a look at NOC here, Noah. I actually took a day trade on this and actually just closed out of it just literally as we were starting the halftime report. So I'm fresh and clean out of the thing. But there was a good movement intraday as you're seeing weakness in certain areas. We talk about a stock pickers market, and we can go find good stocks on the bull side, Matt. We can find good stocks on the bear side as well. Big companies like Northrop Grumman, when you're seeing them selling on weakness, what's your read on this?
Oh, it's weak. I mean, but if you're waiting for the trigger on that one, you got to wait for the breakdown.
Yeah, for a swing trade. Raytheon, Altria, CXO, Mylan. There's quite a few. Let's move on to the Dow Jones.
Altria is a different pattern, though. Altria tried to get back up above that 58 handle. It didn't. It got beat up pretty hard today and yesterday.
Yeah, absolutely. Let's move on to the Dow Jones Industrial Average and the large cap 30 here. Dow is playing a little bit of catch up. The S&P is a little bit stronger today at 0.7%. The Dow at 0.43%. Is there anything of note outside of just the fact that you've got Walgreens and Boeing and some of the others that are weak? Noah, let's get your read technically on the Dow here. How do you read it?
It is knocking on the door, poised for a breakout. So yeah, the Dow with only 30 components gets weighed down a little bit by some of those laggards, but I think overall it's going to follow the rest of the market up. It will break out.
Mm-hmm. Yeah.
So yep, right there.
Matt, where do you rank the Dow? Do you got, for me, it's NASDAQ, S&P, Dow, Russell.
NASDAQ, S&P. I got the same NASDAQ, S&P, Dow, Russell. If you'll break that down into a 30-minute chart, you can kind of see what Noah's talking about with the knocking on the door, the breakout there at 26,300. Keep an eye on the Dow at that 26,300 level. If the Dow can break out of that 26,300 level, and I believe the tick up there is about 26,302. But if you can close above that 26,302, you should have pretty clear selling up into that 26,500 level, where that next level of resistance would be.
Did you say sailing or selling?
Either one.
Either one works for me as well. As I look at some of the strength, Intel, it makes sense. Chip makers are up, AMD is up, Intel is up 2.7% here today.
Look at Cisco. Cisco's a juggernaut right now.
It's really interesting when you see an entire industry like this start to move. I mean, the three of us, we know it. We've been trading forever. But I think for a lot of new traders, that discord between sectors and industries, it's not always been there. And the market was so bearish last quarter, in the fourth quarter of the year. Everything was going down at the same time. We now are evolving into more of a stock pickers market. Intel, Cisco, Home Depot is strong again. Matt, we talked about a breakout on Home Depot yesterday. Give me a quick look at Home Depot, if you would, Noah.
You bet.
By the way, Tim,
Mm-hmm.
one contract on that AMD trade that was in the options report last week would have paid for 6 months of Tackle Trading Pro subscription.
Wow. Get in the game, guys.
One contract.
Wow. At some point, we're going to have to bring Justin Driscoll on and talk about his back testing on the option and stock reports that he's been posting in the clubhouse. It's been really fascinating. I think for a lot of new traders, you got to get in there and you got to pull the trigger. You have to understand equity curves and drawdowns and risk and reward and position sizing, but you don't have to trade 100 contracts, Matt. Even just small contract sizes, if you're a new trader, that can make a huge impact. I love the advice. Home Depot here was a breakout. We talked about it the other day. We talked about it on Monday when we were going through our market skyline. That was tradable, triggerable, and here we are carrying through. Noah, when you see something like this, do you feel like you've missed it if you didn't make the entry on Monday?
Yes and no. I mean, this is one of those situations where I think you can momentum trade it. If you miss the initial breakout, and the momentum trade is one of the first trades I learned, you simply buy above the candle high and put a trailing stop behind it, and you can ride whatever's left you might not catch the whole range, but that's moving up. It's got solid volume on the breakout, and I think it's got a lot of momentum. Plus, seasonally the market's moving the right direction. It's got a lot of things going for it. And I don't see a lot of overhead resistance until maybe 200 or 205 ballpark.
Yeah, I would agree with that. As I look through the rest of the Dow here, Apple Computer, we're talking about it. It's up 1% today, about hitting that target zone. Matt, we talked about this yesterday. Is it that 197.8 range, or do you go for 200, or do you just trail stop? To me, it's strong. And if it's a core position holding, you don't have to take it off just because you're at resistance. But I could see swing traders thinking about profit taking here today.
They'd be wrong.
Yeah, I think they would be wrong as
Why
well.
Why would you profit take at a first target on momentum? That makes no sense.
Yeah, and that doesn't make a lot of sense to me.
I mean, if I get a doji tomorrow, that's a different scenario. But when you got a big green candle coming into a first target in a bullish uptrend, you don't want to lock in that profit. You want to give that sucker a little bit of a room to breathe and let it run.
Mm-hmm. One stock that's grabbing me that is a little bit different than all these strong bullish stocks on the Dow is Nike. And give me a quick look at Nike, if you would, Noah. You would think an international trade relationship with China and being able to open those doors and the policies would end up benefiting it. But gap down on earnings, now a backfill. Some could even argue, guys, this is a kiss goodbye type of pattern. I know that I'm not bearish on Nike right now, but I'm looking at that and I was going through the Dow trying to find the weaker stocks, and this one did stand out to me. Noah, give me a read on that kiss goodbye, if you would.
That is exactly what it is. Kiss goodbye with the gap, old support resistance zone. You can see the M for murder. You can see the big breakdown on the earnings news. And then as it rallies back up, one of the things I'll always want to look for on that is that volume. And you'll notice here, volume really tapers off as prices have run back up into that kiss goodbye scenario. So keep an eye on it. And if you get a trigger to the downside, you probably see another leg down back towards the 80 zone.
Mm-hmm.
So yeah, absolutely.
If you're looking for bearish delta, trigger under 84 makes a lot of sense.
It does make sense. I mean, there is a pattern there that is tradable and discernible for sure. And one that many technicians look for when they're looking for a bearish trade with a put option, something like that. Two other down stocks I want to take a quick look at are Boeing and Walgreens Boots. Let's start with Boeing. And Boeing is one of our favorite stocks. We've talked about it. We put it on our dividend fireworks list, Matt. For a while, the whole market was Boeing to us. I mean, it was going up.
It was a tackle 25 stock for 4 consecutive years.
Yeah, we love the company. Can you do anything with it here? Anything at all?
Not directionally. No. That would be a mistake. Could you do something theta based? Yeah.
Mm-hmm.
Yeah. A poor boy's covered call might make sense here. instead of doing something like a covered call. But a poor boy's covered call does make a little sense here. But from a directional perspective, no, this is still in the do not touch list for me.
No, that pattern just looks like noise to me. And I think cash flow or theta, while we're waiting for some clarity on direction in the news, makes sense to me as well, just like Matt was just talking about. What say you, sir?
Love the company. What with the news cycle on it, I might pick something else just because of that. But otherwise, I think a poor boy's covered call makes sense because you have earnings coming, which should help the long-term option volatility. You can take some short-term option cash flow. So that certainly would be reasonable. If you gave it had a good risk graph on it, I think you could ride that for a little bit and not have too much risk.
Mm-hmm. WBA, last one on the Dow, then we're going to move on to some of the NASDAQ stocks and the NASDAQ and keep working through our indexes as well. WBA, Walgreens Boots, they dropped on so much weakness yesterday. We saw the gap point, Matt. It was the worst day they had in so long. If I'm looking at this chart here and all right, there we are. I see the candles right down there at the bottom. I got to squeeze my eyes here.
Absolutely.
In there.
No, they were hiding under the
They're
earnings.
hiding down there underneath the earnings. Yeah. Gap down, runaway gap, worst day for the stock in a long time. It's been in a precipitous downtrend. On this weakness here, is there any kind of delta-based trade that could be crafted? Let's start with Matt.
Yeah, short.
Yeah. That makes sense to me. Yeah.
A terrible, terrible earnings report, terrible gap, no buying action in any capacity, broke the intraday support levels yesterday. Market showing strength, Walgreens showing weakness. You momentum to the downside the same way Noah was talking about momentum to the upside. It's the only way to play that.
Oh, no doubt.
Noah, runaway gaps like that, how do you typically approach them?
Well, first of all, let me tell you a sad story. I was short this stock and I closed it out just before earnings. So I feel bad now. But that being said,
how many times has that happened though to us traders over the last 15, 20 years? Like seriously, you have a great trade going on and then right before earnings, you're like, I can't take the directional exposure. And then it goes in your direction. You're like, damn.
Yeah, the higher low with the green candles a day or two before earnings, I'm like, yeah, it's not worth it. I closed it out, and then sure enough, it headed south, and that's that momentum trade right there. Anytime you get a gap down, what I look for is for it to take out that first candle or even the second candle. Basically you momentum trade it. It takes out the candle, you enter. You can use a trail stop or intraday trail stops. Mm-hmm. And I think the easiest way to momentum trade that gap is to break it down to a smaller time frame. Get down in there on an intraday chart, maybe a 15 or 30-minute chart, and just get down in there on the intraday and trade it on a small time frame. Get down into like a 15-minute time frame and just go from there. You'll have a much easier go of it.
I got a question for you too, as you bring up the chart there, Noah. When you are dropping it down to intraday timeframes to trigger into a swing trade, what is your favorite intraday time frame to find the trigger?
I used to be a very low time frame guy, but I discovered it created impulsive trading in
over trading.
I don't go below 15 minutes these days. So
yeah, I personally like a 30-minute chart. That is by far. I used to be a 5 and a 15 is what I was. Mm-hmm. But I'm more now a trigger on the 30, manage on the 15.
Yeah, I think, and unless you're a hyperactive day trader who likes scalping, there's no reason to go down below 15 minutes. Yeah, which is cool if that's what you're into. But
those. I'm not saying those are not legit systems. Those are great systems. It just, I'm like I find myself when I do that, I overtrade sometimes. Yeah, and I get stronger signals on the 30-minute chart.
I really approach day trading as a way to try to get into a swing trade. That's kind of how I do it. Is I don't necessarily sit and day trade for day trading's sake, because that to me is more like a full-time job, and I don't really want a full-time job. Mm-hmm. So I'll get down to the intraday chart to basically have a more control over entry onto hopefully something that matures into a swing trade.
Yeah, that's me too.
Yeah. I mean, there's different timeframes that can work for any trader. It's got to fit your style and what your expectations are for day trading. I like day trading as well. Everybody out there, if you're a trader, I mean, you've got to find a style: day, swing, position, cash flow, whatever it is you're doing. There's a lot of different ways you can build your edge in the markets. Move on to the NASDAQ, if you would, next here, Noah, NQ. And this is our #1 rated index currently. There's a lot of things that could obviously change in the market, but at this stage, obviously it's showing me the most strength. And Noah, I got to point something out.
Yep.
What is it that you have set on your charts that makes you change the scale every time you bring up a chart?
I
It's
save the
driving me
layouts
nuts.
to do an auto. I haven't set to a manual scale because I don't. When I get to auto scale, I don't like the view of it. So it drives me nuts sometimes too. I don't have it on my live account, but on this virtual account, I do.
I gotcha. I'm like, what is he doing? Oh yeah.
Yeah,
It's all right.
manual scale, and then I have to just save the chart settings. But when I load it up, I once upon a time put it on a manual scale so I could make screenshots easier for me.
By the way, you know what
Yeah.
would be a really cool tutorial video, and I know that you know how to do this really well, is where you use those arrows to set up different chart timeframes and flash through them.
Oh yeah.
Maybe at some point, if our halftime crew would want that, and I know they would, you could maybe do a tutorial for our YouTube channel on how to do that. I think that's really a cool way to build your charts in Thinkorswim. NQ contract, we've been up 5 days in a row. It's showing me a ton of strength here today. Amazon is looking like a breakout. We already talked about Cisco and Intel. Facebook broke out. Let's first read the NQ contract and kind of talk about this. Noah, with these 4 or 5 candles in a row, what's your read?
Solid move, increasing candle size on the breakout, trading near the high, clearing a big resistance zone for it. And again, in the context of that big picture, I don't see a lot holding it back from testing that 7690 resistance out there. I think it's going to hit it maybe by the end of the week. So
Matt, we got a question from our halftime crew yesterday. Is Fang back? And we said yes. And today is more confirmation that. I know that one day is not confirmation completely, but let's look through our Fang stocks real quick, Noah. Let's start with Facebook.
What happened to Fangum style? I like that.
Fangum style, I will do a dance video at some point. I will require some time and maybe some meditation to get ready for that. Facebook, though, starts the Fangum style dance, and it is a breakout and carry through on momentum, 1.65% today, clearing out of resistance. Now, the exact trigger might have been yesterday, depending on exactly where it closed. Could even be today. W pattern breakout into clear air here, Matt. I know we don't like the company based on what they're doing. We're not a big fan of Zuck. What's your read on the chart?
Charts breakout. Period, end of sentence. I mean, you got strong movement on the breakout. You got good volume yesterday on the breakout. You are approaching that first level of resistance that you have to be concerned about with right around 180. If you can get above 180, you should have clear selling to 188.
Yeah. Noah, is this a buy?
Well, I've already got a back ratio on it, and I was waiting for this to break for quite some time now. And I'm glad to see it break to the right side on the upside for that. And I don't really love the company. That's why I did a back ratio, because earnings is coming.
Yeah, I did a straddle for that reason 2 days ago.
Yeah.
Mhm.
So, nice breakout. I think you're absolutely right on the read. If it can clear that 180 ballpark, I think you got clear sailing to 185, 190, no problem.
Well, I love the straddle idea a couple of days ago, Matt. That's a really good way to play it because you knew you were going to catch direction one way or the other. It's obviously going up with the market momentum going up. Volatility at a low point. We did do the straddle yesterday and talked about it. Those volatility trades, they're neat.
Well, and we talked about the straddle coming in on Monday on Facebook when you asked me to analyze it, and anticipating a move one way or the other, coupled out with a little bit of volatility build over the next 2 weeks. It's just a matter of how do you manage that trade now. Put options are low deltas, call options are high deltas, so you probably adjust that trade now.
Everything looks strong on large cap tech to me. Intel, Facebook, Google. We've looked at these stocks so many times. Amazon might be lagging just a little bit, but attempting a breakout here. Give me a look at Amazon real quick, Noah. I have been critical of this company in the last few months. I've even believed that it had a very weak pattern at times and thought it could break down. It's now attempting a pretty good high base breakout here. I got to tell you, instinctively, I look at that chart and I still have caution. I don't know why. You have Doji candlestick 0.7% on a day where so many other stocks are up 1.5 or 2%. To me, relative weakness. Am I misreading Amazon? And am I just missing something other people are seeing? It is a breakout, but I'm not seeing the same strength as I'm seeing in other companies personally. Matt, do I need my eyes checked or what?
I think you have a little bit of confirmation bias going on Amazon right now. I actually like the pattern. I like the breakout here on Amazon. Yeah, you would love to see a little bit of a more aggressive price action. I mean, Amazon really hasn't moved from the opening price, tested down a little bit. But if you can clear above that high of today, yeah, Amazon should be running.
Yeah, yeah. C'est la vie. Noah, is this a buy for Amazon? I mean, do I
Well,
also?
I've already got a broken wing butterfly on it, and I'm playing it bullishly. I think it's going to continue to drift higher. I just don't see a ton of momentum in it, but I think it's just going to follow the market.
Yeah,
Broken wing.
yeah, Tim, to be clear, I am not personally directly trading Amazon.
Yeah. Yeah, me neither. I'm missing out on the boat. Maybe if they break out and run. I don't
Maybe
see
you're not. I mean, when you're looking at all those other stocks we've looked at over the last couple of days, and you're looking at those option reports and those stock report picks from last week, there's 50 better technical setups than Amazon right now. So I don't think you need to force the action on Amazon just because it's Amazon.
Yeah, that's where my mind's been. I thought Google was an easier setup, Apple was an easier setup, and even though I'm not,
Cisco was an easier setup. AMD
yeah,
was, every one of those chip manufacturers were easier setups.
yeah, I agree with that. Let's move on to the Russell 2000, then get through our, currency and commodity analysis so that we can get to our cover call discussion, which is what our feature is here today, guys. And by the way, I just looked at the clock. It is right at the top of the hour. And just a reminder to me to say thank you for being out here at Halftime Crew. Hashtag Team Tackle in the chat right now. If you would, give me a hashtag Team Tackle. If you ever put a tweet out there about trading or anything or something on Instagram, hashtag Team Tackle. That's the one that we're trying to promote. And if you're watching our show right now, like and subscribe. And let's make sure that we get these things promoted out there properly to build our tackle trading community. RTY has been lagging behind, but I've said this many times. Break out of 1600 on strength. If the market wants to run in Q2, Matt, this thing could easily rocket right up to number one. I mean, in a hurry too. By the way, and it might just stay weak as too. It has higher sensitivity. It has higher beta. When you've got this compression pattern here sitting on the 200 period moving average, I know it's got a lot of things to fight through here. Trade deal in China, maybe something else, maybe Q2 earnings propels it. What's your read on the Russell?
It's lagging. If it does break out of 1600, it can certainly play catch up, but I'm not going to be the one to say it's going to do it right now. I mean, we have not seen that over the course of the last month, so I'll wait until I see it. But right now, I still got a neutral to slightly bearish call on the Russell 2000, and I will not change that neutral stance until 1600 is violated.
Yeah, I'm kind of neutral right now as well. That 200 period moving average obviously does stick out like a sore red thumb or a green thumb, I guess, based on the color coding we're looking at here, Noah. How much does that play into you as a catalyst, as something that you look at as a barrier to change?
Well, it is a force to be reckoned with between the 200 period moving average and the established resistance zone right above it. You need to see a breakout on that because otherwise those are hard ceilings. Those are like the brick wall, the brick house, little pig, let me in. That's a pretty solid technical, reference point for people.
Yeah. Yeah, I agree with that. Take a look at the dollar next. Let's move through currencies and commodities. Little bit of economic data here today. I saw Matt coming through on a Wednesday morning. We obviously had the oil inventories numbers, which happen every Wednesday. We'll talk about that when we talk about crude oil. But I saw a manufacturing number come in less than expected. I saw a PMI number come in a little bit better than expected. Employment come in less than expected. Weakness in Europe, but positivity out of China. How do we read the economic indicators right now?
Our economic indicators last month have been trash.
I think so too.
They've been absolute trash, and there's no other way to put it. You have miss after miss after miss after miss after miss after miss. The market does not care. The ISM non-manufacturing report today came in at 56.1 versus an expectation of 58.1. Non-farm roll employment change came in at 129K versus the expectation of 184K. The market does not care about the negative data. It does not care about the negative data, despite the fact first quarter earnings growth is expected to be at a negative 3.6%, and that keeps getting downgraded. I mean, literally every week that keeps getting downgraded. So the negative economic news, the negative growth news, the negative first quarter earnings news, the market does not care because the U.S. and trade are talking again.
Mm-hmm.
Tim, it's a narrative. I talked about it yesterday. The narrative is we suck right now. We're not going to suck in 6 months from now. And so let's just bypass all the negative news. I'm going to trade with my eyes, but this negative news will not just go away, guys. It will build and build and build. There will be a moment where we have some degree of massive correction here.
Fundamental analyst right now and economist, they're just shaking their head. They're like, what's going on?
It makes no sense.
We had first quarter earnings get destroyed and they dropped like 4% year over year, I think, quarter over quarter as well. They had a drawdown. Second quarter earnings are not expected to be good, but because we've lowered so much guidance and we have all these expectations, we now have a hurdle that we can easily just jump over.
Classic Wall Street, lower the bar, clear it.
It really is.
Yeah, like, hey, it's easy to clear a bar you lower. Pat yourself on the back. It's not too shabby. Everybody will celebrate. They'll forget that they lowered guidance in the first place.
It's true.
I heard one of our fellow coaches and mentors that we all know, Keith King. I was talking to him in Boston a couple of weeks ago, and he said the same thing he said 100 times: hold your breath and buy. And that mindset around certain things when you don't believe in the fundamentals, but the technicals are showing you a signal. There are times where, as a trader, you have to just trade the chart, right?
Fundamental analysts.
That's what you always do that.
Yeah. Fundamental analysts are a buzzkill. There's no fun in fundamentals. You got to buy.
Or you have to sell. You also have to trade to the downside. I think
understanding the economic data, it puts you in a position to prepare for the eventual correction that we see. Whether we see a repeat of what we saw in December of last year or not, it prepares you for that. But you never do that until support is violated on the chart. And until that occurs, you are some degree of buyer here. The market is bullish. Technically, it's bullish. It has momentum behind it. Trade the momentum and don't let your own hesitation from, oh my God, we're overvalued and fundamentally this makes no sense and economically this makes no sense, because you would be right, but that doesn't mean the market's not going to go up. You trade the chart, you trade with your eyes, you don't trade with your mind. You prepare for that eventual correction so you don't miss out on that opportunity. But until that occurs, and I promise you in the halftime report, when the market breaks support, we'll be with you that day when it happens. We will be with you that day. But until that occurs, we're going to be buyers as long as we're pivoting higher.
So you need to tell me that Shiller PE ratio of 31 is not a problem.
And hold on, and it's going to get worse. The Shiller PE ratio is going to get worse because you have price appreciation and you have EPS downgrades. And when you have EPS downgrades and price appreciation, the valuations get out of whack real quick. I mean, a 31 PE ratio on the Shiller, man, that's massive.
That's only time it's been higher is 1999. We can start partying now, just like it is 1999, because I think it's going to go higher.
By the way, shameless plug for my Twitter at Tim Justice Utah. But I did tweet out Shiller a video about Shiller talking about the PE ratio the other day. It is a problem. I mean, it's a problem, and on a day-by-day basis, you can't get worked up about what's going to happen in the second or the third or the fourth quarter of the year. You got to do big picture analysis, on the weekend and kind of have an overall market posture. But what you said, Matt, is 100% correct. As long as it's bullish, your job is to buy. And when it does turn bearish, we're going to be there with you to show you that is breaking down, and we're going to trade it day by day as the market evolves. It's the only thing you can really do, right? I mean, it is the only thing you can do. Back on the charts real quick here, Noah.
Hey, real quick, Tim, let me answer Jonathan's question.
Yep.
Jonathan asked, what is the Shiller PE ratio? The Shiller PE ratio is basically, famed economist Robert Shiller created the Shiller PE ratio. It's also known as the cyclically adjusted PE ratio, otherwise known as the CAPE ratio. And that PE ratio, basically think about it like this, Jonathan. It is a collection of the average PE ratio. It's not the exact same thing as a PE ratio because the calculation is different. But the way you want to think about it is that it's the average PE ratio of the S&P 500 companies. And it's an indicator that helps us understand valuation of where companies are from a value perspective. And when the Shiller PE ratio gets up into that 25, 28, 29, 30 range, you're talking about all-time high valuations is what you're talking about. And as long-term investors, that's an indication that we might be a little more overvalued in this current market cycle. And every market cycle is going to be a little different. When you look at the subprime market cycle, for example, I believe it dinged at around 28, 29 at the top of the subprime market cycle. I believe the ding was around 44, in the dot-com market cycle. And you can date this back all the way back to 1929, where the Shiller PE ratio was right around 28, 29. Again, very similar to what happened in the subprime. So when you're looking at this Shiller P ratio at a 31 scale, that to value investors is like, wow, that is a little bit overvalued, and we might want to start locking in some profit in those value stocks. And Jonathan, you probably have heard me say before that value investors in this V-shaped recovery we've had in the first 3 months of this year, value investors are celebrating, and not because they're looking to add to positions, but if they got whacked in December of last year, that gives them an opportunity to start locking in profit on some of those value stocks. As a short-term trader, we really don't care about the Shiller PE ratio. That does not play a role in trading a breakout or a bullish retracement. But as a long-term value investor, it certainly does play that role.
100%. Yeah. And that's the difference between fundamental and technical, obviously. And I love that breakdown right there. The dollar here hitting its head red candle, it does show me some interesting pair setups on a lot of the currency pairs. But until you get the jobs report done on Friday and clarity on Brexit, I know that they had some news out of the UK today, but I'm tired of it, quite frankly.
Oh, you don't want to talk about Theresa May bucking the Conservative Party and going to the Labour Party and negotiating with Jeremy Corbyn? You don't want to talk about that?
No, I want to talk about crude oil dojing at a high point.
You don't want to talk about April 10th being the next vote? You don't want to talk about that?
No.
You don't want to talk about the Conservative Party saying they might move away from Theresa May?
I could have a flat in Piccadilly Square, and I could be eating fish and chips right now, and I still wouldn't want to talk about it.
Brexit broke it. I don't know what you're talking about.
I sent out a tweet yesterday. I said Groundhog Day is better than Brexit. Period.
Oh,
that's a true statement.
That is a true statement. Crude oil.
Real quick before you go to crude oil.
Yep.
You said there's some interesting cross pairs. The interesting cross pair that I'm looking at right now, and if you look at it, Noah, US dollar Swiss franc pair. So USD CHF.
Mm-hmm.
Little bit of a M formation, short term breaking of support, tick the 200-day moving average, and now it's testing kiss of death. That's the only one that's really kind of setting up for potential to take advantage of what we might anticipate as a little bit of a retracement on the dollar. That might be something that to take a look at before Friday.
I mean, if we're thinking Forex markets right now, Matt, I would say the dollar is more likely to fade back into the range than just start rallying again. We had weak job data today. We've had weak economic indicators. I mean, there's no real, and the Fed may even lower rates. I read a report or some kind of news thing in briefing.com somewhere where actually President Trump has been calling Jerome Powell.
Hold on.
Yeah, I read that.
Hold on. Did you read it though?
I didn't read the whole thing.
Okay, hold on. This is funny. So he calls Jerome Powell, President Trump does. And at the end of the call, he says, well, I guess I'm stuck with you. Too good. Too good.
What does he want him to do? You know what it is. And I'm going to listen. We're not talking politics.
He's mad at Mnuchin for even recommending him in the first place.
No, let me make it simple. Larry Kudlow knows that if they keep rates where they are and the economy turns over and you have a sell-off in Q3, Q4 at the end of this year, it could affect the presidential election. And if it's the early part of next year, so they are doing everything they can desperately, whether it's not good for the economy, to try to manipulate.
I agree. I agree with you 100%, but let's not play party politics on this one. Obama would do the same thing. Bill Clinton would do the same thing. Every president in the history of mankind would do the exact same thing, because it's not about monetary policy or fiscal policy or inflation or stagnation. It is all about one thing, and it's what the fame what was his name? He said it's the economy, stupid, right? The economy, the economy number one, the economy number two, the economy number three. If the economy's doing well next year, Trump's president for 4 years again, guys.
Yeah. Oh yeah. In fact, if I was going to put on a tinfoil hat, I would wait till next year to raise the rates and cause the economy to crash. If I was going to do that.
If you were a conspiracy theory and you yeah, yes, let's all put the tinfoil hats on. So yeah, this is par for the course. No president likes a rising interest rate environment, guys. No president does, because they know it slows down the economy. That's number one. So yeah, do they want interest rate decreases to ramp up the economy? Yes. As somebody who's more concerned about inflation than the Fed is, that makes me cry a little bit. It does. But I'm not going to blame President Trump for trying to put pressure on Jay Powell, because I'm going to tell you right now, if I was president, I'd be making that same phone call and doing the exact same thing President Trump is doing.
Yeah, and Jay Powell's going to ignore him mostly, but then he.
Oh, really? Based
No,
on what? Based on the last 3 months, Jay Powell bent the knee.
Table it.
Crude Jon Snow this to Daenerys. He bent the knee.
CL contracted.
I think I just compared President Trump to Jon Snow.
First of all,
I think I just did that.
I'm on a Game of Thrones kick right now. Obviously, everybody is. If you're a GOT fan, you know what I'm talking about. Getting anticipation and a lot
I've
of.
never seen an episode, not one.
You're the only one in America.
I know.
Well, I was right there with you until about 2 months ago.
Hold on.
I will say it's good.
Well, if I go missing, you know what happened, right? Like I watching it and.
What you have 11 days if you want to catch up before the release of the new season. Just lock yourself away.
This is not a constructive point I'm going to make, Noah, but you're wrong and you're stubborn. Watch the show.
Listen, I'll tell you right now, with all the entertainment out there that people have at their fingertips, you can never blame somebody for not watching a show. How many times have you guys had someone come to me, you got to watch this show, you got to watch this show, and you're like, God, out of the 5,000 different shows we have, I gotta watch that one. There's
I don't have enough time in the day to watch all that Tackle puts out, much less Netflix.
What's wrong
I'm with you.
You're a coach.
Yeah. No, listen,
I don't read everything Tackle puts out, so I don't blame you.
The pigs are out of the pen here.
It's hard to hurt a pig, bro.
I don't think
we grew up having to try to chase pigs down and put them back in pens, which is where my thought came from. That was one of the worst things about growing up. My dad tried to raise cattle and pigs, and we weren't good at it, Matt.
We were terrible farmers.
Story for a podcast one time. Crude light inventories built 7 million barrels, and it's a doji today. There's nothing going on. The EIA data, honestly, it just becomes a news event. I don't really even care what the number comes out as.
News event, so stupid.
If you're day trading crude, you got to be aware of it, don't you think?
Yeah, of course. I mean, it's the number one. Of course, it's the number one report on a weekly basis. But it's a joke of a report, doesn't it? Just because you have to be aware of it, and it does play a role in the price action of crude every Wednesday. But Tim, I mean, they missed by 7.9 million barrels.
They miss it every week.
I mean, it was supposed to come in at a drop of negative 0.77. It came in at 7.2 million barrel increase. So yeah, I mean, when you see a massive increase when the expectation is supposed to be a decrease, and you're at that target that we talked about based on the pattern in crude oil yesterday, the EIA numbers gave the traders reason to lock in some profit. And I truly do believe that's all that's happening today.
Not seeing really anything across the energy sector of note. Let's move on to metals. Gold real quick. Gold's not doing anything. Just got to, mandatory as part of our routine, and gold's the most important precious metal there is. Got concerned about the pattern. We've hammered this one to death, but there are 2, maybe even 3 of the metals that I am finding fascinating today, Matt. Palladium is a complicated pattern. In fact, some would even say a bearish developing pattern. I still like the long term of PA, but you've got 3 green candles into a red candle pivot confirmation here.
If that was a stock, we would say short.
We absolutely would. Noah, give me a read on that chart.
Well, that's a heavy sell-off. Lots of downward momentum. This is, a bear retracement, textbook example of that first retracement of a breakdown. Coming up into that 50-period moving average and the falling 9-period moving average with that bearish engulfing. Yeah, that's a bear setup. And when you see a big correction like this, it's really, really common to see a next drop down, just another leg down. So it usually goes drop, rally, drop, and then it'll settle in and find some support. But it's been running hot, and I've been wondering where the top is on palladium for a long time now, and I think we've seen it. And now that top comes in, you see some profit taking, and it'll probably drop back down towards 1,300 to 1,250.
100%. And when palladium is showing me this, and it's been the number one metal for so long with such a runner, I start looking elsewhere thinking, okay, what else could be moving, Matt? And you called this one this morning and said, hey guys, keep an eye on this platinum. Platinum is about to break that 880 level. And if you're a commodity or futures trader, I mean, this is significant to me. It's been bottoming now for about 6-8 months,
Well,
and
some of the negative news on palladium was positive news on platinum.
That's right.
And when you're looking at platinum here, I think you got a very clear resistance level right there at 880. And if you can break out of 880, that's a trade that we should all be tracking.
I think so. I think so as well. And also copper /HG, if you would here, Noah. And by the way, there's so many different ways to play these metals, and you should always go review the commodity reports. There are stocks that track them. There's so many different companies. There's ETFs and whatnot. Positive trade deal out of China. I've said this for a long time, Matt. It will be a huge boost for copper. That's my opinion.
Can I give you a did you know real quick?
Sure.
Did you know that a lack of copper was the reason the first paper currency failed?
I did not know that.
And did you know that was also out of China?
I did not.
So you were talking China and copper.
So they were holding copper to back the paper currency?
No, they were holding copper to not mint, but to basically create the paper currency and the copper. And so the copper was kind of helped them kind of create the currency. And when they had a lack of the copper, they couldn't create the currency, hyperinflated, and it died.
Chinese invented the fiat.
Yeah, they did.
Yes.
7th century.
Mm-hmm.
Noah, as you look across these metals, do you see opportunity on copper and platinum?
I see a lot of opportunity in commodities in general. I think that you've got some good upside on both of those. The platinum chart looks fantastic. The HG chart looks fantastic here. I think you've got good upside potential. They're not going to be huge runners, and you definitely need to understand, if you're trading the futures, you need to understand how that leverage works. That's super important. Mm-hmm. But if you're looking for, there are some ETFs out there that can track those metals and commodities in general.
And if you don't understand how margin works in futures, please don't trade in futures.
Correct. Obviously a paper trading instrument on everything. That's true of options and futures and Forex until you know that you're good at them. There's no question. And while we're on all these commodities, and I don't know if Bitcoin is a commodity or a currency, Matt, but I do know this.
People have called it a commodity currency before.
Mm-hmm. BTC.
I don't understand that. I would like to know the intrinsic value of Bitcoin in comparison to gold, but
I've heard the argument before. I would also.
The argument is the internet can't shut down. And that's a dumb argument.
There's a limited number of Bitcoin. There's only so many in their mind.
And that's a dumb argument too, because they fork it, and they create more.
Right. I will say this though, we broke 5,100 here today.
Oh, it's a runner.
It is a mover right now. What's the news on this? What's going on? Is it just institutional buying coming in? Is it short covering? Do we know anything yet?
I thought we'd agreed that it was my call on Monday. I thought we had always agreed on that.
We did.
No, I mean, yeah, like I said yesterday, you had a massive order come in across multiple different exchanges from an anonymous buyer of Bitcoin. And, we don't know who that was, but that massive order drove a lot of momentum behind it. And the holders started celebrating, jumping on the momentum. But one additional thing here is that you're staring right down the barrel of that 200-day moving average though. And that 200-day moving average is going to play a very, very significant role for Bitcoin. And I did read an article today that suggested that, and I have not back tested this, but I'll just tell you what I read in the article, that 36% of the time when it's underneath that 200-day moving average, buying Bitcoin is a failed proposition. Whereas 80% of the time when it does get above that 200-day moving average, it is a positive correlation. Mm-hmm. And again, I have personally not back tested that. And whenever I see 36 versus 80%, I'm always like, okay, whatever. That's confirmation bias. But we all know the 200-day moving average does play that role. If you can get back above that 200-day moving average, maybe you can run. I think you're a little overextended to really kind of jumping into pull at this point, and probably need to wait for a better setup from a technical perspective. But there's tremendous momentum behind Bitcoin, and it's not just the momentum. Look at the volume in the last 2 days on Bitcoin. The volume in the last 2 days in the futures market has exploded in volume in the last 2 days. And again, just take off the symbol here of Bitcoin. If you replace that with, say, Applied Materials, AMD, Apple, Google, increase in volume on a breakout of 4,000, all of us would be like, buy, 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 buy. But again, momentum aside, you are a little overextended, and I would probably wait for a better technical setup if I'm looking to trade it again.
Yeah. Yeah, and that is our daily routine here, ladies and gentlemen. Obviously, we break down the markets one step at a time. And one thing we do every day in our halftime report after we get done with the routine is talk about a topic. We bring up one idea, one different thing that we're going to discuss each day. Yesterday it was straddles. Today it's covered calls, Matt, because tonight is our Tackle 25 Mastermind group. And Noah, you are hosting that. Noah, you're a big fan of the Poor Boys covered call, and we're going to get to that here in just a minute. But Matt, kind of explain, if somebody's out there and they're watching and they don't know what the Tackle 25 is, what is that?
The Tackle 25 is our list of fundamental stocks that we like doing covered calls on. And I'm not going to go through the criteria, everything that goes with the Tackle 25, but you actually have 4 different lists. You have the Tackle 25 covered call list. You have Dividend Fireworks, which is a dividend paying stock covered call list. You have the Dirty Sexy Money, which is, these are not fundamentally strong companies, but we love doing covered calls on because we can get massive premium coming into them. Think US Steel, think AMD, think that type of stock. And then you have what's called the Poor Boys covered call list, which are typically higher dollar stocks that we like doing covered calls on. But because you have to buy 100 shares of the stock and you're dealing with a $300, $400, $500, $600 company, a lot of people can't buy the 100 shares to do covered calls on that. And so we do what's called a poor boy covered call on that. And so what Noah's going to do here tonight is he's going to prime you guys up. He's going to walk you through what the poor boy covered call is. And then in tonight's Tackle 25 Mastermind group, Noah's going to deep dive on the poor boy covered call. So for you pro members out there, we're going to do a deep dive on the poor boy covered call in tonight's Mastermind group. And if you're not a pro member yet, guys, you can get over there to tackletrading.com, sign up for a 15-day free trial, and go learn what the poor boy covered call is tonight.
And while Noah gets ready to talk about Poor Boys, let me ask the audience here and halftime crew, how many of you guys have actually finished the Tackle 25 course? Just type in the word finished if you finished it.
It's a beautiful course, Tim.
I love it. I'm very proud of it. Matt,
We're obviously biased.
We are biased. We are biased.
Yeah.
I mean, we did the heavy lifting. I did the recordings and
I
did the editing.
Christian myself kind of designed it. You did the recordings, and it's a wonderful. I mean, it's 2 hours of great content that will teach you everything you need to know about the covered call.
Yeah,
including management, Tim. Including management.
And if you have finished the cover call course, the Tackle 25, go ahead and if you do recommend it to other people who are out there watching, just say something nice about it in the chat. Shameless plug there. There's no doubt about it. I'm not going to mince words there. But I love the course. I want people to watch it. I think
we love Tackle. We want more people to find Tackle. So if you guys love Tackle, your halftime crew, and it's helped you out, you love the reports, our webinars, our mastermind groups, our coaches lounges, tell a friend, tell a family member, tell somebody about it.
By the way, there's a correlation here, Matt. Look at all the finished coming into the chat right now. And that's our halftime crew. There's no doubt about it.
Halftime crew.
Tonight, you're going to have a full hour to do this. Give us a 5-minute crash course on what you're going to spend the whole hour on tonight, if you would.
Oh, absolutely. And I just pulled up the Tackle 25 on right off the Tackle website. And I just have to say, I love the jean shorts above the Poor Boy covered call.
That's all Christian.
That's classic.
That's all Christian.
We're going to work off the Poor Boy covered call list, and we're going to take this watch list here. And we're going to build out the Poor Boy covered call, talk about the rules, of course, which, I think a lot of people are familiar with. But we're also going to talk about how to roll the options on it. We're going to talk about how to roll the options up if it's running up, and even how to roll options down if it runs down. And we're going to talk about the trade management aspect of the Poor Boys covered call. And we'll take a really deep dive into that. And of course, if you have, Poor Boy covered call candidates, so in addition to our list here, which by the way is a great list if you're not using these watch lists. We got, really good volatile stocks that give pretty consistent premiums. And I love the Poor Boys covered call heading into earnings season because you can take advantage of the volatility hike. And you buy that long-term option, which has got a really high vega and a low time decay, and then you sell that short-term option with a nice time decay. So you get a theta positive, vega positive position in a bull market heading into earnings season. And I think it's one of those kind of win-win scenarios where it's an ideal strategy right now, and you're not going to want to miss it. So make sure you're all there.
Love it. Love it. Hey, one last question, and we'll see all you guys in the mastermind group tonight. I'm thinking about buying the VIPs. Convince me I can. I'm thinking about it. I haven't done it yet, and I'm thinking about doing it for cover call reasons. Okay. Now, some of you might not know my history with GoPro and the VIPs. Two of my worst calls ever. Okay. I've had good calls. But those are two of my bad calls. I got out of the VIPs a long time ago. Okay. Long time ago. But I like the break of 8. I do. And it's a great covered call stock. It definitely would fit the dirty, sexy money.
Oh,
right?
it's dirty. It's sexy.
It's dirty and it's sexy. Okay.
Yeah.
But
I love
I'm
this
thinking
stock.
about going back.
Matt, there's a reason why we put it on the list originally
Listen,
last
I
year.
didn't lose money on covered calls doing the VIPs.
It's a fine candidate. Yes. Listen, I like it. I like it for covered calls. You've got your range up a little bit from a pay range perspective. You've got
No, I
earnings
don't
coming
care
out,
about
but
that
you could
on the
say that
covered
about a
call.
million things. Covered call is not supposed to be a short-term swing trade, so
4% monthly. Without margin.
Yeah, that works. I'm sold. There you go.
Maria says never again.
Listen, I don't blame anybody for that. The VIPs was a difficult cover call. No doubt about that. But if you'll remember, so was AMD.
Well,
And if you just said, I'm never doing AMD again, you missed out on the last 4 months of 60% growth.
that's right.
Okay. The hate goes too far. And hasn't the hate went too far on the VIPs here? Positive Chinese news coming out, deals coming out. I mean, Tim looks skeptical here.
I have no problem with it. I have no problem. Bring up GoPro again.
I have a question.
Buy 'em both.
No, different. No, I'm not thinking about buying GoPro.
Could we dissuade you if we tried?
Probably not.
There you have it.
The analysis is fine. There's so many of these small cap Chinese tech companies that are actually looking pretty good right now. So the only real debate would be why the VIPs over one of the other 10 that are looking good in China that are about the same price. And I don't know the answer yet.
Revenge trade.
Yeah. Revenge trade. Oh,
That is never good analysis when it starts with
Vindictiveness is a perfect reason to trade.
I was just thinking, I was like, that doesn't sound like something we should teach, the revenge trade.
No, but I'm being honest. I'll attack it. No, listen, I like the break of 8. It's confirming reversals. Listen, it's a good directional trade here too, above 8. Quick stop loss under 8. I haven't decided. I'll think about it.
I bet first of all, go to the actual trade tab. Let's look at what the cash flow would be. I bet the cash flow in the
$35 on an $8 stock. It's
4%,
4.3%.
4.3% is right in the wheelhouse. I don't really like it when I'm getting 6, 7, 8% because that tells me too much risk, right? 4% is a dirty, sexy money candidate that I got no criticism of this.
Guys, do we not realize one of the most powerful things with covered calls is the ability to offset risk by writing calls against it?
Yep.
By lowering cost on the stock to break even. So yeah, I get it that some people don't have a positive correlation with the VIPs, but if you're doing the cover call appropriately and you're collaring on earnings, the VIP should not have hurt you.
Yeah, I like the idea. I love cover calls in general, which is why we have all the different lists. We have the poor boys ones and the dividend fireworks. And if you are, wanting to dip your toes into some of the more aggressive ones, hell, AMD's up 10% today, Matt. The VIP's up 2.6% today. Though that dirty, sexy money list has had some incredible performers this year.
Mm-hmm.
Yep.
By the way, the VIPs is not on dirty, sexy money.
No, it's not.
The VIPs got banned. It has a permanent ban.
So it got banned from the list, but not banned from the revenge trade.
We removed AMD from the Tackle 25. Doesn't mean I don't do covered calls on AMD.
I'm okay.
What are we? Are we going to just shun every stock that we lose money on?
Could we make a dirtier, sexier money list? Yeah, I'm just throwing.
Could you get more dirty than dirty? I'm sure we could find some high flyers. Yes, I'm sure we could find some high flyers with volatility to the point where we're getting 7, 8, 9% on a cover call. I'm sure we could.
Yeah. All right. How do they find the show tonight, Noah?
Oh, well, you got links right on the homepage. I think we've got them in the daily email today as well. So you got the links both there and there. And I'll post it in the clubhouse right before we go live. So.
And speaking of the daily email, the concept Matt is really hitting on right now is the fear of losing money. And your history with a company should not affect it. So if you did have, a loss or two on a certain company, bad experience, it shouldn't impact your analysis. Now, we're all human, Matt. We try to remove as many of the emotions as we can. But that FOLM, I love the daily email today. It was really, really well written. The fear of losing money, just like the fear of missing out, are real emotions. And if you have history of something, that can creep into your analysis. Some people would not trade a company because of their history with it, which I get it, but not
the
necessarily
history
rational.
is a lot of it is based on mismanagement, Tim.
Yeah.
Let's be real. Let's be honest here. A lot of that is based on we write cover calls and then we don't do anything about it. We don't add the caller when it breaks support. We don't call it around earnings. We get beat up in the face and then we're like, oh, this just doesn't work. No, people mismanage the cover call. They need to understand when to add callers and when to pull the callers off.
That's right.
By the way, Brandon Brown gave me the new name of the new dirtier sexy money list, and I can't say it I can't say it, but it's funny.
You'll have to tell us off.
Well done, Brandon.
That's a coaching call. That's a scouting report meeting.
That's a scouting report meeting.
Conversation. All right, halftime crew, if you're out there getting the game, if you have not taken the Tackle 25 course yet, go and do that. It's on Tackle Trading's website. Just go to tackletrading.com. You can find it. It's pretty easy to navigate that site from there. And we will see everybody back here tomorrow. Coach Matt, Coach Noah, Coach Cody, Coach Tim from Tackle Trading. We're out.
Like and share, buddy. Like and share. Later, halftime crew. See you tomorrow.